Hello there, Theo. Can you hear me okay?
Okay, awesome.
Excellent, excellent. And if you can enable me to screen share, then
Sure.
I will bring up the
Mhm.
my slides for today's session. Fabulous. Here we go.
All right.
Boom.
So I wish you the best luck.
Super. Thank you, Theo. Thank you for setting up. Thank you for the introduction. Good afternoon, everybody. I hope you can hear me okay. I hope you can see the slides. That's the important thing. There a little bit of a tech issue there to begin with, but that's the world we live in. Anyway, great to be here for the next in our price action trading guide. And today we're going to talk about utilizing the highs and lows with price action trading. So quite in fact, very useful, a very useful sort of tool and technique to understand in terms of the way markets operate, and being able to marry that with what we've covered so far in price action trading can, in many ways, just give people a sort of an idea on how they could possibly trade and engage with markets, in particular intraday markets, which is what we will focus on a lot of here. Great to see you here, Opera Raquel. Thank you very much. It's fabulous to have you here. I do appreciate, as always, that we have a truly global audience who join us. So wherever you are joining us from in the world, it's great to have you here with us. Okay, we're here at Admirals. We hope you're all well. We hope you're enjoying this interesting trading year already. And I recognise that we have a range of experience for people who join us, from complete beginners to intermediate traders. You are all very welcome. Whilst we'll be focusing a lot of the stuff on what could help beginners, new traders, there will always be a little hidden gem there that basically our intermediate and advanced traders can take away to help them with their own journey. So without further ado, let's crack on, shall we? Remember, here we are, Admirals, all right, okay, a Forex and CFD broker with global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and giving the opportunity to engage with markets using both the MT4 or the MT5 platform. Any questions about Admirals, get in touch with your account representative and they'll be very happy to help guide you. So listen, we'll always talk about what's price action, okay, on the agenda, but we'll talk about why are highs and lows so useful, all right? What is it about them that makes them relevant to us and useful? And not unsurprisingly, we'll focus a little bit on how do we make the best use of them and how do we combine them with price action trading. So there'll be lots there, and hopefully we'll be able to get through and take a little look at the live markets. Here we are today when we're delivering this. We've just had the CPI data out in the US. That's just given us a little bit of a bump, so we'll see whether that's given us any opportunities or whether there's just any kind of real-time opportunities unfolding in front of us. For those who don't know me, my name's Paul. Traded for many years, traded for funds, traded for clients. Primarily, I like to focus on FX indices and commodities, although everything I share about price action is applicable to all instruments and all timeframes. I tend to be a trend trader for my longer-term swing and position trades, and also I tend to be a mean reversion or a reversal trader on my shorter-term intraday trading, which is what is relevant today, ladies and gentlemen. So, it'd be interesting to know, those of you joining us here today, what kind of timeframes do you normally sort of trade on? And two, do you already make use of the particular highs and lows in that session? It'd be interesting to know what, if any, experience you have. Maybe you don't, maybe you've never heard of it. That's absolutely fine. That's what these sessions are for, after all. So, let's cover what we can today, because there's plenty for us to talk about. So, I think everybody's aware of who we are now, all right? Okay, every Wednesday afternoon, we are running our price action in a trading series to basically help new traders overcome sometimes that being overwhelmed or intimidated by being so much information out there, so much on charts. And actually what we want to be able to show is that with a little bit of education, a little bit of understanding of how candlesticks are formed, how price moves over time, that you're able to analyze and engage with markets. And that's what we've been doing here for this series. And as I say every week, we're just looking at analyzing the market using price movement over time. it is popular with both retail institutional traders, and as I say, it's like learning for new traders. It's like learning a new language. The more you practice it, the quicker you'll get to that point where it clicks, and you're able to utilize it not only to analyze a market, but also to sort of drive your trading methods from it. You can see here we have covered an awful lot so far, and I say it every week. Try and cover a bit of hard topics and a little bit of the sort of soft skills. The hard skills are invariably all the kind of bits that traders love in terms of identifying setup. So things like engulfing candles, star formations, pin bar formations, false breakouts, which might be useful for today. Allied with the soft skills that completely new traders may not recognize the value of the start. However, the longer you trade, the more you'll realize that is unbelievably important. So things like preparing for opportunity, having checklists, building routines, recording your trades, grading your trades, all that kind of stuff, which at first you may not think is important. I guarantee the longer you trade, the more important it becomes. And today we're going to look at how to utilize highs and lows. So remember, what I always say is, if you're a new trader and you're just looking for a very simple price action routine to get you started, we talked about it. We've talked about quite a bit of it, and all of those sessions we've done, they're recorded and they are available on the Admirals YouTube channel to watch there. And I think we've also been doing over the summer. We've been doing how to sort of refine and improve it. And those are definitely worth watching, because we go into a deeper detail about having just a very, very simple routine to start with. Whenever you open a chart, it doesn't matter what it is: Bitcoin, euro, dollar, gold, Dow, doesn't matter. First thing, define levels of support and resistance. All right, start on the monthly, go down to the weekly, down to the daily, get those levels in, those levels where we see markets reacting at. Step 2, define if there is a trend. Good trends leap off the chart at you, but the problem is markets only trend 20 to 30% of the time. But if there is a trend, well, ideally what we want to be doing is looking to buy at levels of support in an uptrend, or sell at levels of resistance in a downtrend. And so step 3, we'll wait and see how does price react at those significant levels. And step 4 is, well, if price is at those levels, can we see significant price action triggers, things like pin bars, engulfing candles, key reversal candles, star formations, those things. And it's also worth just taking a moment to recognize step 5, is it part of a bigger chart pattern? Sometimes new traders, they can't see the wood for the trees. They just focus in on that engulfing candle or pin bar, but we want to see what is the context that this is showing up in, and is it part of a bigger chart pattern that you might also be able to trade. We have mostly focused on looking at quite a wide range of instruments, and what I say is, you'll see me talk an awful lot about a lot of these instruments. So all of the kind of the 28 major FX pairs, all right, the major and minor crosses, the major global indices, the major commodities, and the major equities, and also a bit of crypto. But if that sort of is a little overwhelming to begin with, that's okay. Don't worry. I'm not saying you have to trade every single one of them, but they're all available to trade through Admirals. And what you will find is that actually, as you develop in experience and skills, you will start to focus down, and you'll probably focus down on somewhere between 2 to 6. All right, instruments that resonate with you, that that suit your personality, suit your trading style, and that's fine. So we're starting broad, and then you're starting to focus our way inner. So, that's the introduction. We always go through, and I never apologize for going through our routine, because I think the more times you hear it, the more likely it is to just basically stick with you. And the more time it is, it's likely to become just your way of operating, your ideal way of operating. So always go through that, always kind of reaffirming all the major good elements that we can work with. But today we want to talk about highs and lows, all right? And in particular, how do we go on to combine highs and lows with price action, with some of the elements we've talked about and discussed so far? So as I said earlier, it would be interesting to know, of those of you joining us here today in the live session, how many of you are aware of and use highs and lows in your own trading method? Be interesting to know. And with that, what kind of timeframes are you looking at? There's no right or wrong. There's no right or wrong response to that. It's just curious to know, if you're actually aware of it. As I said, you may have been aware of it. You may be just so new to trading that, you're just here to understand about that. And that's absolutely fine. That's what these sessions are for, to help educate you and give you a little bit of insight so that you're able to take away what you learned today and utilize it from tomorrow in your own trading styles. But when we come to look at trading, all right, markets are still traded by humans. Increasingly, a lot of the execution might be done by computers, by algos, but even those computers and algos, for the most part, are still being programmed by humans. They are still, projecting human biases into their programs, but markets are still traded by humans, okay? And humans will look at charts, at price action charts, for usual places for them to do their business, all right? For want of a better way, for you, where you want to trade. So that can be things like big round numbers. We have seen, lots of interest on big round numbers. So at the moment, euro dollar is around about the 110 area. Okay, it was yesterday, coming off it there this morning, right? Gold, 2000, all right? Up until a month ago, 2000 was the big number that we'd run up to, and we were pivoting around. Big round numbers, they are still available. They still play it because humans still look for them. Okay, 000 numbers. They still have a hold of us. But also, what we can look at are previous highs and lows, and you'll find previous highs and lows. And what I can mean by that is, if you're a real sort of scalper intraday trader, you might even look at the previous high and low of the previous session, which might be, for me here in the UK and Europe, we're into the US session, okay, into the New York session. So people might be looking at what were the highs and lows of the London session and be interested to see the relation to price, how it revolves around that. Or more commonly, certainly for myself, you might be looking at what were the previous days highs and lows. Okay, previous days highs and lows, previous weeks highs and lows. They're certainly for intraday trading, they are very, very keenly watched. Okay, and very I'm always fascinated to see how price responds to it. But you can also even look at previous months highs and lows, previous years highs and lows. They all have an element, because as I said, markets are still traded by humans. Markets still will do their analysis. They will still identify significant levels, and things like previous highs and lows are significant. Oh, excuse me, a little sneeze there, a little afternoon hay fever there. So we had that kind of those previous highs and lows, and they are relevant, ladies and gentlemen. They are worth being aware of, and that's what we're going to dig into today in terms of where they are, how we see them, and also what do we look to do once we've recognized where they are, and that recognize that price is interacting with them. So just remember, previous days highs and lows, previous weeks highs and lows are very, very keenly watched and traded, and equally previous months highs and lows, previous years highs and lows. I'm sure there are probably some people who look at previous decades highs and lows, maybe, but that's probably a little bit further out from my timeline than I'm interested myself. But it wouldn't surprise me if people did. So the reason it starts to become interesting for us is because I believe, and I do it in my own trading, is previous highs and lows are very tradable. All right, they are very tradable in terms of why, in terms of looking for places for traders to do business, and for looking for me to engage using some of my own particular methods. Why are those previous highs and lows tradable? Why are they of interest? It's because there are usually lots of stops there. Okay, there's lots of stops there. Let's get the old drawing tool out here, shall we? If we have had let's just see, I don't know, let's just talk about some intraday kind of price action that has just basically been going all around here. Okay, and what we're looking for is that, we're coming into the session in the morning, and what we're recognizing is that there's kind of, a level of support there. And then there's invariably, a level of resistance there. What we might find, is that basically as price pushes through this support level, is that might be lots of people who start to enter shorts. They believe that the market is going down. So invariably they start entering shorts there. But they're looking for, well, where do I put my stop? right, where do I put my stop loss? And what the most natural place would be above, okay, the level of resistance, which might be the previous day's high, okay, in that particular case, or the previous day's low if you were to flick it. And what that means is that, you know, there can be lots of stops, all right, stops placed in these particular areas. Beneath these, you'll find beneath the highs and lows, there will normally be lots of stops there, lots of stop losses. There'll be lots of entry orders and lots of stop loss orders as well. And so what happens is that those areas, they become attractive areas for dealers, right? For you know, what people would call market makers. Why? Well, you know, I always worked on the premise that, you know, dealers, market makers, you know, the big major ones, they only get paid when orders get triggered. Right, they only get paid when orders get triggered. So it is in their interest for price to be bullied towards where the biggest pools of orders are, because that is, you know, that is how they make their living of a sort. Okay, so it's no surprise to see that basically when we identify those areas of highs and lows where lots of stop losses and orders will be, entry orders will be, that price is actually drawn towards there. Okay, that becomes the liquidity for the next move. But when we see once price gets up there, what actually happens is it may also offer us an opportunity for a reversal trade. And what do I mean by that? Is that, you know, if price has a failed breakout and then starts to shoot up towards where, you know, they believe there's lots of orders are sat, lots of the stop losses or orders are sat, well, then actually what we might be seeing is that, you know, there might be traders who are basically looking for an opportunity to trade mean reversion, you know, or a reversal trade, basically trading back into the sort of into the middle of the range. And we will look at that in a few charts in a few moments time to just make it a little bit clearer. So it could be an ideal setup for a reversal trade. So let's have a little look at a few ideas there, and, you know, how we can develop and evolve that idea into an actual trade plan for us. So, you know, I've just, you know, some random examples here. Okay, euro against the US dollar on the 15-minute chart, and what I just want you to recognize is that, you know, I've just drawn in a few of the particular highs and lows there. Okay, on the charts, and what I'm interested to see is how does price react there. Okay, so from this particular day here, you know, price when it comes into the session, this was the previous day's high. We can see that actually it pauses there before it moves, before it comes back. It basically breaks, it retests the previous day's high before it actually fires its way up. And then we can see that actually price had a fabulous move down. And where did that move down end? Well, it ended at the previous day's lows. Price went just a little bit beneath it, okay? Just basically, you know, sucked up all those orders before it launched itself much higher, okay? And, you know, had a good run there before it worked its way. And then the next day when it comes back to it, initially when it comes back to the previous day's high, well, what happens is it rejects it and moves its way down. And even when it breaks through, okay, even when it breaks through, it comes back into that zone and area. And that's just, you know, one of random. And we're going to look at the live markets in a moment. But the important thing is that, you know, markets see that, they recognize those highs and lows, and it's how markets react at those levels that might either offer us an opportunity or might offer us a information on which way the market is really likely to head. You know, and we're going to look at a few more examples of that. But if you are an intraday FX trader, understanding those previous days' highs and lows and those previous week's highs and lows, they become unbelievably important. They can be really key areas where we want to do our business, okay, where we're looking to take our reversal trades or mean reversion trades. So, you know, what I'm always interested is when I'm operating as an intraday FX trader is, you know, clearly as always, okay, you know, I'm going to want to know what is the major news that's being released for that day, for that session. All right. So today, you know, we've had like the American CPI data. We'll have the Bank of Canada announcements. Okay. I think that's at 3 o'clock London time. Okay. That's about 40 odd minutes. So you're always wanting to do that. But what I'm also looking for, all right, is I'm looking to see, you know, the previous day's highs and lows. Where are they? Okay, where are they? And as I said, we'll switch across to the charts in a bit and be able to talk about it. I'm also interested in where are the weekly highs and lows, right? So the previous day's highs and lows, the previous week's highs and lows. We'll look at the relationship there. And I'm also just keen just generally also in big round numbers, all right, big treble zero numbers. Okay, I'm of interest in that, because when price reaches those areas, then I am looking for effectively a reversal. I'm effectively looking for a reversal, a mean reversion trade back into the range. And that is where I can start to combine the price action tactics that we have spoken about consistently throughout this series. So things like a pin bar rejection candle, or an engulfing candle, or a key reversal candle, or a double top or bottom. Today, we'll focus a little bit on double tops and bottoms, but we'll still look at our opportunities and examples for things like pin bars, engulfing candles, key reversals, etc. But just because of the nature of the time we have allocated today, we'll just focus on double tops and bottoms, because we see them, occurring, in quite a lot of times. Okay. And being able to recognize and understand that, it might be an opportunity where you're combining price action tactics with the context, the sort of the particular market that we have in front of us, and look at how we can utilize that to build a small price action trading plan. So in particular, as I said, we'll focus a little bit on double tops and bottoms. Okay, a double top, all right, it generally looks like an M pattern. A double bottom generally looks like a W. All right, and there are variations on that. As a general rule, okay, if you're looking for the best double tops, there should be it should be a very clear double top, and realistically, okay, the second leg, okay, the second high should be lower than the first high, because that should in itself should give you an indication that price is no longer able to go higher and is looking to roll over. In the same way that realistically, what you're looking for is on a double bottom, is that the leg one should be lower than the second leg. The second leg should be higher. It should be already be giving us an indication that basically the bulls have stepped in, all right, and price is reverting, okay, and moving back into the range. That isn't always the case 100% of the time, but ideally that's what we're looking for. But when you trade intraday markets, what you want and what you get can be very different, and you have to be able to improvise and adapt and overcome based upon what the price is telling you at that particular time. Why do I like particular double tops and double bottoms? What is it about them that work for me? I'm a big British guy who used to play rugby when I was young and able to, and I very often see that price at previous highs and lows is almost like looking on a rugby scrum from above, all right? And at this particular, the rugby scrum, you've got the two opposing teams, if you've ever seen a rugby scrum occur, and those two opposing teams are like the bulls and the bears in the market. And actually, price is the rugby ball, right? And in a good scrum, the price might get kicked about between the two opposing teams as the two opposing teams look to effectively, grab the ball and grab control of the game. And that's what we're looking for, in the terms of a market, is that we're looking for one of the bulls and bears to wrestle control from the opposition and take it from that. So we will look at that, and that's the way I look at it. At some point, one of the teams starts to get on top, and they basically, will wrestle control, and the ball is pinged out. Okay, and think of ball as like price. When I'm looking at it in the markets, because price has already put in an overextended move before it reaches its double top or its double bottom, before it's rallied into the previous day's highs or lows, I have an anticipation that it is more likely, there's a higher probability that it will move in one way other than another. So I'm ready for a reversal. That's what I'm looking for. That's we will make that a little bit clearer as we go through. Caroline says, is it better to take into consideration the wick of the candle or the top or the bottom of the body of the candle? That's a good question, Caroline. If you don't mind, what we'll do is I'll try and answer that when we look at the chart itself. It might be easier to basically look at that, to identify that if we look at the chart. So great question. And if you don't mind, we'll look at it when we're looking at some charts. So it'll give you a little bit of a clearer understanding. So, there's lots of people describe double tops and double bottoms in lots of different ways, all right? And you can find lots of different styles, okay, of trading, right? Double tops and bottoms, but really as I was saying earlier about the kind of like the rugby scrum, we're expecting prices already put in a good move before it hits the first peak. Okay, price falls back. And as I said, there's a little bit of a battle going on here between the bulls and the bears. We're expecting, all right, ideally that the second high is lower than the first high. It doesn't always, but that's ideally what we're looking for. If you were going on classical technical analysis, that's what you'd be expecting. But classical technical analysis and what you get in the market, sometimes they're different. You have to trade what you see in front of you. But it is invariably we're expecting when there's this double tops here and it's not, and it's no longer going higher, we're expecting price to move down. We think that's the higher probability move, and so we're ready to looking at places where we can get short. That's what when you see a double top, that's what we are particularly looking for. Okay, that's what we're aiming for, and you would flip that for a double bottom itself. And as I always say, whenever I talk about double tops and bottoms, if you need a personal reminder, you can just look at the palm of your left hand, open it as wide as you possibly can, and you'll see there's a very nice clear M pattern there, a double top pattern there in the palm of your hand. So if you ever need a constant reminder of what you're looking for, well, you'll see it. If you want to turn your hand up, you can do so. All right, but on mine, it's much clearer on my left palm. Okay, and it's almost like I've been branded, all right, as a double top trader. All right, that's and we'll talk more of that when we look at the charts in a moment. So, as always, you've heard me talk about a confluence of events. Right? I always talk about that confluence of events. That's what we're looking for. Namely, it's great to see a price action reversal pattern like that. However, there's more to it. I want to see confluence of events. I want to see 2, 3, 4 things all come together at one time and place to give me the higher probability that the trade is going to work out. So, so overall, you need to consider the context. Namely, it's got the price action and the pattern, double top or double bottom, but also the location, right? Is it at a previous high or low, whether it be a previous day's high or low, or previous week's high or low, etc., or even something like a big round number. What I'm also interested in particular is the timing. Okay, the timing of when it occurs. Does it occur after a breakout of the Asian range, especially if you're an intraday FX trader, or do I need to see price continue to move to basically just almost like overextend itself before it snaps back? And also I can utilize things like the ATR, the average true range, which we'll cover in a future session. But for today, we can just look at focusing on previous highs and lows and looking at price action patterns, and in particular double tops and bottoms. But we will also take on board pin bar rejection candles, engulfing candles, key reversal candles, star formations, etc. So it's a confluence of events, and you hear me say that all the time through this session. All right, it's it's great to see one great candlestick, but ideally I want to see 3, 4 things coming together at one time and place to give me the best opportunity. So here's the one from an Asian session. This is the 5-minute chart on the Kiwi against the dollar. And what am I interested in here? So what I'm interested here is, and hopefully maybe you can see these blue lines, right? They are simple indicators that can be plugged into MT4, MT5. You can find that they're not paid indicators. Okay, they are out there that you actually can access them. And very what it will do is it will draw in for me, in this particular case, the yesterday's high and also previous week's high. Okay, so that's where we can see it, and you can probably already see there. Okay, you can see that must have been that little ping there was the high of the yesterday. It's probably on a bit of news, and then we can see as it's gone in, it's drawn in that line for me. And what do we have here? Okay, during that session, in this particular case, the Asian session, is that price pushes up to the previous week's high, the previous day's high, and then what pattern does it put in there? It actually puts in, okay, that double top. All right, that double top pattern. And what also is happening for me is that the secondary top, even though, as I said, this one, it pushes a little bit higher, there's a wick. That in itself, the second leg is a pin bar rejection candle. Let me clear these drawings. No, it's a pin bar rejection candle as part of a double top at the previous week's high, and the previous day's high. Remember what I was just saying, confluence of events, okay? Looking for 2, 3, 4 things all come together, one time and place. That's where I'm trading. That's where I want to be doing business. That's what I'm looking for. Okay, that's what I'm waiting for. That's what I'm trying to achieve. Okay, as part of my intraday trading style. And actually, as you can see, what we see is that bang, price breaks. This is the 0.2, which is normally where your entry is with your stop above 0.3. That's the kind of, let's say, the basic double top trade. And as you get more advanced, there's ways and means to tweak that. But for today, if you can find it, see it, and then you can see basically where does price run to. Well, actually, it runs to the 200 period moving average, which becomes, a little bit of a kind of price pivots around there, and that's not unusual. All right, 200 period moving average can be useful. Now, some people in terms of how they look to trade that, some people might use like a fib expansion number. Maybe they have a trade based on their units of R. Okay, if this is if that's 1 unit of R, okay, between your entry and your stop loss above 0.3, well then they might be saying, well, 2R here, okay, Paul, 2R is, excuse me, I think is just in front of the 200. That'll be my target, 2 to 1 intraday. You'd be very happy as an intraday trader, sort of being able to look and do that. So that's just like one little example. I've got 1 or 2 other examples, and then I want to switch across to the live charts themselves. I want to show the different types of double tops, double bottoms, how price can react. This was an interesting one. This is the pound against the dollar on the 15-minute chart, and the grey box is the overnight Asian session, which just make me want to make aware of. But equally, also what we had what do we have there? We had that big round number, okay, 120, okay, triple zeros. Remember what I was saying there, that I'm looking for previous days highs and lows, but equally I'm also interested in seeing when I see price action happen at those particular levels, breaking out of Asian sessions, getting to previous days highs and lows at big round numbers. And in this particular case, we have price pushes down. It then prints a bullish engulfing candle, so aggressive traders would already be starting to buy. And then what we see is we have bang, there we go. We have a double bottom there, don't we? So we've had a double bottom there outside, okay, the lows of the overnight Asian session at the 120 number. Once again, it is that confluence of events. It is 2, 3, 4 things coming together at a time and place that basically gives us the idea that the higher probability move is a reversal back into the range. And in this case, once again, we can see that price goes all the way up to the 200 period moving average, and that's the 200 period moving average. Is if you need a target, okay, if you're struggling to target and you're an intraday trader and we've pulled away from that, well, that in itself can be a very simple, very good, very simple, very visual, very clear target that you can work your way towards. Pound against Swiss franc here. Once again, this is sterling here. You can tell I primarily intraday trader of sterling. And actually, what we see here is that this was the previous day. We can see where the high of it was, wasn't it? We can, in this case, I've just driven forward where the previous day's high was. The previous day's lows would have been way down here. And here we have the overnight Asian session, and price breaks out of it to the downside. What does it do? Actually puts in a very nice double bottom there, and then basically price rallies up. And where's the rally stopped? Well, the rally stopped at the previous day's high. And firstly, we get just a false breakout rejection candle there, which kind of becomes a double top there, which then basically decides to move its way down there. But the important thing is that the rally is halted at the previous day's high, and price gets rejected and reverses at the previous day's high. These become, time and time again, you will see it happen. And so you'll find that there are some traders, some of the really old and bold pit traders would very happily just have their orders to fade the high of the day. They would just have their order just in front of it and a stop just above it. And that's how they would look to trade. That's not my particular style. That's not what I look at. I am happy to identify where the level is, and then I want to see what is the price action like there. Is it giving me price action rejection? Is there a rejection candle? Is there a double top? Okay, is there a key reversal? Is there an engulfing candle? These things coming together, one time and place. That's what gives me the confidence to get my trade on. And some people, part of that is all about people's view on the the risk spectrum. Okay, as I said, I identify the level and I want to see how does price react. Then others would just quite happily identify the level and fade it. It's a market. You pay your money, makes your choice. When it comes to intraday trading, you look for them. I generally what you'll find is that the European session I find works very, very well. All right, in terms of we have the overnight Asian session, which comes into the European session from about 7 a.m. London time when Frankfurt opens, then 8 a.m. when London opens, and it's not unsurprising that we can see price move towards the previous day's high or the previous week's high or low during that London session, and that I think is personally the best session. You can trade them in the Asian session, the New York session, by all means, and we'll have a look now. But I tend to find that the London session, tends to be the best for that. So before we switch across to the live charts and have a little look at examples there, as always, I give you a little bit of homework to take away. So your task from today's session is just go away, all right, and on your favorite charts that you might trade, all right, just have a little look on the intraday time scale, the 5 minute, 15 minutes, 30 minutes, and just, if you don't have already an indicator for it, just draw forward the previous day's highs and lows. Just draw them. Just it's a visual thing. You'd be able to sort of see how does the price react. You could also draw on any significant big round numbers, treble zero numbers as well, and just look at what happened when price reached those levels. Did price power on through, which, as I said, is giving you information that actually the trend is strong and it needs to continue? Or does the price action start to indicate that it's ready to revert? Okay, are you starting to get those step 4 price action triggers? Pin bar rejection candles, engulfing candles, key reversal candles, star formations, etc. Because that in itself might give you an opportunity to trade back into the range. And if it reverses, were there those significant price action triggers to alert you to a possible trade opportunity? And remember, if you're not, if you're still learning, if you're still, maybe just trying to grasp, being comfortable with things like pin bars, engulfing candles, key reversals, star formations. Remember, they are all recorded in earlier sessions here on this particular price action trading guide. So be sure to go back and find them. You'll find them on the Admirals YouTube channel. They're all there. Just if you need a little bit of reinforcing, or a little bit of insight into how that might operate. So let's switch across to the charts and have a look at what's going on. But just, in conclusion, price action analysis is a way of analyzing using markets, using purely the price action over time. And we are always looking for price action triggers at significant levels, prices, or zones. And this is just another variation of that today, looking at price action triggers at significant levels, previous days, previous weeks, highs and lows. Remember, markets are still traded by humans, even if algo execution is increased massively. Humans look at charts for interesting usual places to do business. So big round numbers, and also previous highs and lows, previous days highs and lows, previous weeks highs and lows, previous months highs and lows, previous years highs and lows. They are tradable opportunities, especially on an intraday base, when you look at how price action reacts at those levels. That in itself can be the start of just a very simple price action trading plan for you to take away. So before we switch on, don't forget to join us next time. Now, just the way that we are over the summer month, actually, my next session is going to be this Friday, okay? Not next Wednesday, but this Friday. And then my colleague Jens will be doing next week. So this week, Friday the 14th of July, join me for the next session where we're going to talk about how to trade 3-bar breakouts. That's what we'll be focusing on. And as it says that, I'll be trying, well, what is a 3-bar breakout? Where do you find them? And how do you actually trade them? So join me for that. That's 2:00 this Friday, okay? Friday, 14th of July, 2:00 London time. Check your inbox for the webinar link, or head over to the Admirals page to be able to register for it. And if you've got questions, all right, you can see the email address there, global@admiralmarkets.com. You're very welcome to send feedback. You'll get a feedback sheet after this. It'd be really good if you could just quickly fill that in. That would be very useful. All right, we always appreciate that, and we'll look at it. Georgia says, great jobs, many thanks. You're very welcome, Georgia, but we're just going to switch to live charts now. So if you want to stay with us for a moment, we'll switch across there and have a quick look. So just bear with me a moment, and we'll switch across to the charts. Here we go. Okay. Around. This is interesting. Okay, so I am hoping you can see my charts now. I'm hoping that you can still hear and see me. Okay, so we had CPI data about what was that, about an hour and 12 minutes ago. We had the US markets open about 12 minutes or so ago. So there's going to be a little bit of volatility, and we can have a little look and see how that has particularly played out for us and such. So let's see, have a little look at yeah, super. So this is the Dow, not the Dixie. All right, the Dixie, the dollar index. This is a 30-minute chart here, and what you can probably see is that the blue lines are where the indicator I have here just draws on, previous days highs and lows, also previous weeks highs and lows. And what we're particularly interested in is this period yesterday. Okay, so why are we interested in that as well? We can see that the dollar has been in a significant downtrend for about the last week or so, moving down quite nicely. And then, so remember what we were saying, in a trend, okay, in an uptrend, we want to be looking to basically chances to buy, okay, the pullbacks. In a downtrend, we want to be looking for an opportunity to sell rallies, don't we? That's what we're looking for. And what we had here is, yes, we've been in a clear downtrend. Yes, this was a place where you could have sold the rally there, okay? There were other places as well, but that was a place to sell a rally. But also yesterday, and what are we interested in is that basically, price having started the session sort of just lulling around its lows, it pushed its way up. What did it run into? Well, it ran into the previous day's lows. All right, it ran into the previous day's lows, and also the 50-period moving average, which once again we've got a confluence of events. You've got previous day's lows in this case, support becoming resistance. You've got the moving average, and you've got price action. You've got three things all coming together there, and it's a rally in a downtrend before price basically dropped for the remainder of the session and overnight, and has continued. It has continued on, but I think most traders would have probably just basically traded that in and then looked to close in front of the news in case of news going badly. But what we want to be able to see there, as I said, is that we've got a double top there at a previous day's low in that particular case, and also a level of resistance, dynamic resistance from the 50-period moving average there. It just basically, it's confluence of events. It's 2, 3, 4 things coming together at one time and place. That's what we're looking for to give ourselves the best opportunities. We also had one of the ones I wanted us to have a little look at because it's a good example is have we got it on here? Well, let's have a little look at the West Texas. All right, so this is oil. So we've looked at FX, but I wanted to also show you a little bit on West Texas, just another chart. And once again, what we've got here is the price has been in an uptrend. You can see that there's 250 are happily nice. You can hopefully see the blue lines where we've got these are printing in yesterday's highs and lows, previous week's highs and lows. If we look here at the start of the week, what happened is the start of the week there, okay, or rather Friday of last week, price popped up. Where did it run into? It ran into the previous day's highs, put in a rejection candle there, didn't it? Rejected it before basically price dropped its way out. And here is why I want to look at this, is because actually we can see the next time the price comes back up to it, does it reject it? Does it react it? Or does it just slice through it? If it slices through it, the previous day's high, what is that telling us? That's telling us that basically, the price is likely to continue going higher. And that's what it does, okay, for the rest of the session. And that's the high of Friday session. When we come in to the Monday session, we can see, price is drifting down until it starts to rally up. Where does it rally up into? Where's that rally stopped? it stopped at the previous day's high. You can see the blue line there. What's the price action like there? Well, the price action there is shown as rejection. It's showing as rejection there, isn't it? It's, you know, it's not like here where it's slicing through it. It's rejecting it. And so what does happen? Price rolls away. And I think if we were to look there on a lower time frame, you'd see, like, you know, clearer rejection patterns, double tops there. The next day, what happens is price goes sideways. Price comes up to the 50 the previous week's high. Okay, it's not only that, it's the previous week's high. Okay, which is also here where we were interested. And what happens is the price action there, it closes, it pushes through it and closes above it. Does that look like it's a rejection candle? No, it doesn't. Okay, so what's it likely to do? Well, actually, what it's likely to do is continue higher, and that's what it does. Today, what we've done is we've just effectively, for the most part of the day, we have just pivoted around the previous day's high. That's what it is. We've just pivoted around it. Why that? Well, because we're waiting for the CPI numbers, and the CPI numbers come out, and we've shot away. But for most of that day, we have just pivoted around that previous day's high. So hopefully, even just that, over those last few days on oil, you can see that the impact of the previous day's highs, previous week's highs, and looking at how price reacts does here we go. You know, does price reject it? Okay, that's a reversal trade, or does price slice through it? In which case, price is going to continue in the trend. So even though it's not giving you a reversal trade there, it is feeding you information on actually what's likely to happen next, which you may choose to use in your own particular trading style. Let's have a look at. I want to have a look at Dow Jones. Oh, interesting. So this is the 4-hour chart on the Dow Jones, and I was interested in it just before we came on, because actually what we had here is this is these levels here. That is the previous week's high. Okay, previous week's high, and I was interested because as we came into it this morning, or into the new, you can see, this morning session, once again, we were just pivoting around yesterday's highs. That's where we were until the news came out and we shot up. And I was looking at that just before we came in. Here we go. Let's just, what I was looking at is, was that actually, as we got up to the previous week's high on the 1-minute chart, okay, very aggressively, what did we trade there? We traded a double top, which basically we ran our way down, and then we started to see it reverse. Okay, reversed off, and it's come back to that level. It came back to the level. It's gone higher now. But what I'm interested in is that pretty much after the news, you can see where the big news spike came out. Where did that news spike stop? It stopped at the previous week's high. Okay, stopped at the previous week's high, and it double topped off it. Okay, so as I said, the patterns and the levels, they are important, and we see them happening time and time again. Okay, and that's what we're interested in. We're looking to see how that plays. And interestingly, if I look at that now on the 1-minute chart, that has come there. It then basically looking at it was going to pivot around it, and then it basically broke through it, and then once it breaks through that, it comes back to it, and now we've gone from being resistance to support, and off it's going on its new uptrend. So as I said, these are clear levels where you can see markets react to. There's always lots of orders here. There's lots of liquidity in the good, the bad, and the ugly sense of it that you can actually utilize for your as a guide to help you look to see where price is likely to go, and also to see how how price is if it does present us with opportunities there. I'm just kind of curious because we came up to the low of yesterday or here. This is the dollar CAD. We've come up to it here, there. Okay, I'm just looking at that, and I think we just pinned it before. We pinned it here, which would have been a nice short. But the reason we wouldn't have been taking that is because we were inside, just running into the news. So I don't look to trade inside of news yet. You can see there, it's just the news has come out there. But you can see once again what was the high? The high was yesterday's low. All right, previous day's low. Had gone from being support to resistance, and that's you can see for yourself that is how that has played out there. This afternoon since that news came out. Okay, ladies and gentlemen, unfortunately, as always, time flies when you're having fun. I hope you have found that session useful. I hope that has helped give you just a little bit of insight into the importance of previous days' highs and lows, previous week's highs and lows. Okay, and as I said, you can look at previous months and previous years, but on the shorter term trading, okay, previous days and previous week's highs and lows are really keen to do it. You can draw them on, or you can find an indicator. There's plenty of free indicators out there for both MT5 and MT4 that you can plug in that will draw that there for you. And I said, we're looking to see, how does price react when it gets those levels? Does it start rejecting it? Does it start putting in price action rejection candles like double tops and bottoms, star formations, pin bars, engulfing candles, key reversal candles? Because that is a confluence of events. There's 2, 3, 4 things all coming together one time and place. Gives me the opportunity to predict that there's a higher probability of price reversing off that and back into the range. And if that is a tradable opportunity for me. So I hope you found that useful, ladies and gentlemen. I hope that's given you a little bit of insight that you can take away and utilize. Remember, my next session is on Friday of this week, okay? A couple of days' time, and we're going to talk about trade 3-bar breakouts there. So by all means, make sure you join me there Friday at 2 o'clock London time. And until such time, I hope you have a great trading week, and I'll see you then. Cheers, everybody. Take care and trade well. Thanks.